Hey, hi, good morning, all of you. So let's start the session. Um, our transfer pricing topic is left, and we are practicing more questions from transfer pricing. So, two topic which we will cover today is one of the topic is international transfer pricing, and the second topic which I'll cover today is your dual pricing method. So two topic is left. I'll cover those two topic. Dual rate transfer pricing system. So these are the two topic which is left, and I'll cover these two topic. All right, these two topic we will going to cover today. And with this, we have covered all the topic of internet of transfer pricing. We have covered all the topic of transfer pricing with this. All right. So let's cover. Let's cover the dual rate transfer pricing first. So what is this topic, ma'am? What is it all about? Dual rate transfer pricing. So generally what happened, you know that how we decide the transfer pricing for the organization. When we produce the goods in the organization, how do we decide the transfer pricing? Generally this happen, right? Like we have two division A and division B. All right. We have two divisions. And for these two divisions, we have to decide the transfer pricing. Generally, what happened that we see first that whether this division who is transferring the goods from division A to division B, we will see here whether they have capacity, whether they have spare capacity or not. We check this first. Whether they have the spare capacity, say yes or no. If they have the spare capacity, we decide that the transfer pricing will be variable cost. If they do not have the spare capacity, they're working in full capacity, means whatever they are producing, they are capable of selling them outside market. If they're working in full capacity, then what happened? So in that case, we transfer price is equals to market price. Now the question comes here that sometimes this transfer pricing may discourage the manager. Because if you will see, if the transfer pricing will be variable cost, then the profitability of this department or division will be very less. For this department, the transfer pricing, if it is variable cost, the profitability will be very less. Profit will be very less. Then what will happen? If the profit will be less for this division, what will happen? The manager will be discouraged. Why? Because on the basis of the property, this manager will get the bonus, appraisal, commission. So this manager will get the appraisal based on the profitability of this division. All right. So if the profit of this division will be less, then what will happen? The appraisal of this person will be less. So what will happen? This is obviously not good. You know? So in order to encourage the managers so that they perform well, so that to encourage them, what will happen? We sometime adopt dual rate pricing method, where what happened? We decide instead of variable cost or instead of market price, we decide, here we decide that the transfer price will be cost, matlab total cost, that will recover both variable and fixed costs. We will cover the cost, total cost, that will cover the variable cost and the fixed cost. We will cover that. And we will cover what? The profit. So the transfer cost will include, transfer price will include both the cost, total cost, and the profit. So in this way, you will see that the transfer price for this division will not be a variable cost. It will be the total cost and plus profit. Right? Total cost plus profit will be the transfer price. And what will happen, obviously, according to that, manager of division A will have a profit, while the manager of division B may raise objection with this, because he will say ki nana, I can buy the same product from outside market sasta. Then he may raise the objection ki nahi, ye to nahi chalega, hai na? So in such case where he is raising the objection, what will happen? Where he is raising the objection, so for that reason, what will happen? Dual transfer pricing rate. Matlab, transfer pricing for both the division is different. It is not same. Generally, this happen na ki transfer price is same. Agar yahan pe this is the transfer price, so transfer price for this will also be the same, right? Yahan pe bhi this will be cost plus profit. So in this way, what will happen? This is revenue for this department. This is revenue for here, and this is total cost for here. No, it is a revenue for one department and it's a cost for another department. But it is not happening here. This is not acceptable to them. This manager will not accept this. Because this will, if you will increase the cost here, the profitability of this department will reduce. You know? Because transfer price is the cost for them. If you increase it, the profitability of this manager will reduce and he will raise the objection. Nahi chalega. So for that reason, for this department, the transfer pricing will be cost plus profit. But for this department, the transfer pricing will be only variable cost. So you can see for the same transfer, what we are considering, transfer price for this department is different and the transfer price for this department is different. It is not same. Transfer price for both the department is not same. It is not coming same here. All right. Ab dekho, one question you may ask here, ma'am. First, why are you doing this? Kya reason hai? Why are you doing this? Aisa karne ka kya reason hai? You are considering two transfer pricing, two different transfer pricing. What is the logic? Why are you considering two different transfer pricing? First, to encourage the manager of both the division. दोनों को दिख रहा है profit, दोनों को appraisal मिलेगा, दोनों खुश हो जाएंगे. So in order to encourage both the manager, we use this strategy. In order to encourage the manager of both the division, we use this strategy. So this is the first reason. And what is the second reason, ma'am? The point is that we are considering this transfer pricing just for the appraisal. Otherwise, overall, the calculation will be different. Obviously, you know the transfer pricing doesn't affect the overall profitability of the company. Okay, so whatever the transfer pricing you are deciding here, it is just for finding the profitability of respective division and just for finding the profitability on the basis of which the appraisal can be given to the respective managers. This will not at all affect the profitability of entire organization. This will not at all affect the profitability of entire organization. So for that reason, we adopt here the dual rate transfer price method. So I have a question. We have a two question. Read this question. I'll give you time. Read it. Take 5 minutes. Take 3 minutes. Read it. Read this question, then we will discuss. Read this question, we will discuss then. Yes. Read this question, we will discuss after your reading. So I hope you people have done the reading. Yes, read the question, then we will discuss. Okay, so now let's discuss the question. I hope you all have done the reading of the question. See, the point is that I told you that when you will see the question here, they are very lengthy. I told you that you should develop this habit of reading and understanding the question. All right, you should develop this habit. So let's read the question and let's try to understand the question first. What is given here? Global multinational company has two divisions. Produces component X which it sells to outside customers only. Okay. So division X is producing a product which they are selling only to outside. Ab dekho, if I'll just read it now without drawing it, it will be difficult to understand me at least. Okay. I'm just telling about myself that whenever I read these question of transfer pricing, I start drawing it, so that I start making the picture. I start imagining the scenario, what is actually happening here. So as I told you in last session also, whenever you will get the question of transfer pricing, start creating the scenario in your mind, that actually what is happening under the situation. Start creating the scenario. So what is happening here? There is a company, GML. GML is a company. GML Limited is a company. GM Limited is a company. Okay? And the company have two division. Division X and division Y. No, division X and division Z. Okay? It is given here that the company have two division. Division X and division Z. The company have two division. Now what is happening here? The company have two division X and division Z. Then division DX produces component X, which it sell to outside. So whatever the units they are producing here, they are selling entire unit outside market. Assume the scenario, na? Start assuming the scenario. They are selling the entire unit in the market. This is what happening here. Dekho written na? It is written DX produces component X. This division is producing a component X and which it sell to outside customer only. They are selling the entire unit to outside customer only. Division DZ produces the product Z, which incorporate component X in its design. Now, the point is that DX is also producing a product Z, which require X as an input in it. For the production of Z, X is required and X will be what? As an input in it. Okay. What else? Read it, Then DZ is division is currently purchasing required unit of component X per year from an outside supplier at market. Oh, so what is happening? How Z is receiving the goods? X is required there now. It is given that they are buying this product from the market. They are buying X from the market. They are selling X in the market. This division is selling X in the market. And this division buy X from the market. Okay. What else? New CEO for Indian operation has explored DX division, has enough capacity to meet the entire requirement of DZ. देखो क्या लिखा है, देखो नया new CEO have been appointed in this company and उसने explore किया that DX division has enough capacity that they can produce and they can transfer the entire goods to DZ. So देखो DZ instead they can buy it from outside. Actually, they have the option to receive the goods from inside. They have enough capacity here. All right, this is given here. Then, and according, he require internal transfer between the division at marginal cost from overall company's perspective. So here what is happening? It is decided that the transfer will be taken place at marginal cost. Okay, marginal cost or the variable price will be the price at which the transfer will be taken place. This is given here. What else? Manager of division DX claims that the transfer at marginal cost is unsuitable for performance evaluation. देखो उनकी performance evaluate होती है, right? The performance evaluation of manager of division X and the performance evaluation of manager of division Z will be taken place. And on the basis of performance evaluation, they will get the appraisals. On the basis of their performance, what will happen? They will get their performance evaluation will take place here. On the basis of performance evaluation, they will get appraisal. How well they are performing. So देखो obviously X का manager will raise objection. I don't want to transfer the goods at variable cost. Why? Because in that case my profitability will be zero. In that case I will get no appraisal. He will reject it. Similar thing happened here. Manager of division DX's claims that transfer at marginal cost is not good. It is not suitable for the performance evaluation. Since they don't provide incentive to the division to transfer the goods internally. Obviously, he will say, no, I will not transfer internally. Why? Because he is not getting any, incentive here for the transfer of goods internally. He will not be happy to transfer the goods internally. He will not, because he will not get any incentive. Okay. He stressed that transfer price should be cost plus markup. Oh, so he is stressing over what? That the transfer price should be cost plus markup. So instead of marginal cost, he is stressing that the transfer price should be cost markup. This should be the transfer price. Cost plus markup should be the transfer price. This is what he is, he is stressing that no, this should be the transfer price, right? Because he want to earn the incentives, right? Okay, then what happened? New CEO worries that the transfer price suggested by the manager of division X will induce manager of both division to make optimum decision. Okay, so discuss the transfer pricing method, overcome the performance evaluation conflict. Abhi dekho, point is that I told you that if you will keep the transfer price cost plus markup, the manager of DZ will raise objection. He will say, if you will keep these, dekho, because transfer price, if you will keep the transfer price, what? If the transfer price will be cost plus markup, it will be revenue for this department. So obviously revenue increases because instead of variable cost, you are considering this. So revenue increases. Manager of this department will be happy, very happy with this. But the manager here, for the manager of other division, it will be a cost. So his cost will increase from variable cost to this. His cost will increase. He will not be happy. अब देखो, there is a conflict. दोनों लड़ेंगे आपस में, सर फोड़ेंगे एक दूसरे का, राइट? दोनों बोलेंगे नहीं 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 नहीं, एक बोलेगा नहीं यही होना चाहिए, दूसरा बोलेगा नहीं 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 होना चाहिए, है ना? So what will happen? There will be conflict between the division manager. शक्ल नहीं देखेंगे एक दूसरे की, राइट? दोनों लड़ेंगे आपस में क्योंकि एक का रेवेन्यू कम हो रहा है, एक का बढ़ रहा है, राइट? So in this case, it will create conflict. Now the picture of CEO will come. How CEO will manage this scenario. अब देखो, if you will get such question in exam, you will understand there is a conflict and you cannot keep one transfer pricing for both the division. So what will happen now? CEO has decided, okay, देखो, transfer price never affect the overall profitability of entire organization. We have discussed this in last session. Whatever the transfer price you will decide for the division, when we are transferring the goods from one division to another division, whatever the transfer price we are considering here, it never affect the overall profitability of the organization. It never affect the profitability of the entire organization. So what is the use of transfer pricing? It is only for the divisional performance, manager's performance. So चलो ठीक है, इसको भी खुश कर देते हैं, इसको भी खुश कर देते हैं. तो हमने बोला ठीक है, एक काम करते हैं, लेट्स अडॉप्ट डुअल रेट ट्रांसफर प्राइसिंग. अब देखो, डुअल रेट में क्या है? वन ट्रांसफर प्राइसिंग के लिए वी आर कंसीडरिंग टू ट्रांसफर प्राइसिंग. दोनों डिवीजन के लिए ट्रांसफर प्राइस अलग अलग. So for this division, we are considering transfer prices cost plus markup. But for this division, transfer price is what? Only variable cost. Right? For the other division, the transfer price is only variable cost. Both manager will be happy with this. Right? देखो, इसका क्या हो गया? If the cost will reduce for him, it is only variable cost. इसका profit बढ़ जाएगा. And for this division manager, instead of variable cost, you are considering all the costs, variable cost, fixed cost, all the cost, plus markup. इसका भी profit बढ़ गया. दोनों का profit बढ़ गया, दोनों happy. But अगर आप देखो, तो it is actually not increasing the profitability of entire organization. If you will ask me, it is actually not the right way of measuring the performance. It is not the right way. But just to avoid the conflict, the company adopts such method. Otherwise, it is actually not encouraging the department manager to increase the efficiency of the department. Generally, why we decide the incentive appraisals kind of thing for the company's division manager? For a reason, to encourage them to perform better. But if you are not properly deciding the transfer pricing, what will happen? It will not encourage the division manager. So here, though you have taken a decision which will keep both the manager happy, but this transfer pricing is actually not encouraging them to perform better. But at the end, just to avoid the conflict, that's okay. You can adopt it. And you can, this is actually encouraging them to transfer the goods internally. वरना दोनों लड़ेंगे और बोलेंगे मैं तो दूंगा ही नहीं, जा जो करना है कर ले. But obviously, the CEO is intervening and he is deciding the transfer price and to make them happy. But it's a case of a conflict, right? It's a case of conflict. It actually doesn't encourage them to perform better. Now, let's see what is given in the answer and how you should write the answer in exam. How we should write the answer in exam. Let's try to see. So what is the answer given here? Let's see the answer. To overcome the optimum decision making. We have taken optimum decision making by considering transfer price as variable cost. This was the best, actually, this was the best way to decide the transfer price. We have taken this transfer price. Just give me 1 minute. So we have decided a transfer price as variable cost. Optimum decision making. And performance evaluation conflict that occur with marginal cost based transfer pricing. ठीक है? तो अब देखो, to overcome this conflict, ठीक है, and optimum decision making, जिससे दोनों happy हो जाए, not this one, optimum decision making, so that to make them happy, to avoid the conflict and to optimum decision making, they are adopting dual rate transfer pricing system. Keep it in mind, actually it is for avoiding the conflict. ठीक है? Optimum means to make them happy, right? You are taking such decision which will make both of them happy. Actually, for the company, it is not good. Okay? Because they will not encourage to perform better. It is just to avoid their conflict. Okay. With a dual rate transfer pricing system, the receiving division is charged with marginal cost, as I told you, of the intermediate product, and the supply division is credited with what? Cost plus profit, total cost plus profit. So both the division manager will have the profit. है ना? एक के लिए, मतलब same transfer pricing के लिए you are considering two things. For one department it is cost plus markup, and for the other department it is only variable cost or marginal cost. All right. Okay, so accordingly, division DX should be allowed to record the transactions at full cost per unit plus profit margin. They will record it as what? Full cost plus profit margin. DX will record it as full cost plus profit margin, and DZ will record it as only marginal cost. Any divisional profit can be eliminated by, हाँ, अब देखो ऐसा हो सकता है ना कि one of the division will have high profit, low profit, कुछ ऐसा scene हो जाएगा, which is not, actually if you will consider this method now, then what will happen, let me tell you, this method if you consider, but for the same transfer pricing is different for both the division. If you consider it, what is the demerit, I mean, what is not good and what will happen, how it will affect the company's account. Okay, let me tell you. Generally, what happened when we decide the transfer price, this happened now. When we decide the transfer price for division X and division Z. So when we decide the transfer price here will be the revenue. It will be the revenue. And transfer price will be cost here. What will happen under this scenario? Whatever the profit you will get here, whatever the profit X1 and whatever the profit you will get here X2. So what will happen? Total company ka profit, you will consider sale minus all the cost. The sale minus cost will give the total profit of the company, that will be X1 plus X2. This will give what? The overall profitability, and this will always be equal. है ना? X1 profit plus X2 profit will always be equal to the sum of the profit of the company. But when you are considering that the transfer price here will be cost plus markup, and here the transfer price will be what? Only the variable cost. What will happen? The profit, whatever the profit here coming, and whatever the profit here coming. In this scenario, it will not be equal. Matlab, in this scenario, X1, if the transfer price will be different, then profit of X1 plus profit of X2 will not be equal to X1 plus X2 profit. मतलब कंपनी का ओवरऑल प्रॉफिट के इक्वल नहीं हो. So you have to make the adjustment to make it equal. Then you have to make the adjustment, and this is what written here. So what will happen if you will decide the different transfer pricing for both the division? What will happen? So internal divisional profit can be eliminated by accounting adjustment. So you have to do some accounting adjustment. Profit ज़्यादा दिखा रहे हैं. Just keep it in mind. We are showing more profit just to make the manager happy. It is not actually increasing the overall profitability of the company. So we are just trying to show here high profitability just to make the manager happy. Just to make the manager happy, we are showing here more profitability. Actually, they are not incurring more profit, right? So at the end, we have to adjust the profitability. At the end, we have to adjust this profitability here. Okay, impact is what? Division DX will earn profit on interdivision transfer. DZ can choose the output level at which the marginal cost of component X is equal to marginal revenue of Z. So what will happen? Obviously, you will do the adjustment. How we will do the adjustment? Not in course. The point is that how we will do the adjustment, it is not in your syllabus. I have not seen even a single question where they're asking you to adjust the profit. So don't do that. Just keep it in mind. Profit will be adjusted. All right. So the two transfer pricing system involves transfer being made at marginal cost per unit to the supplying division plus lump sum fixed fee charged by the supplying division to the receiving division for the capacity allocated to intermediaries. The same thing is written here. So in this way, what will happen? It is a case of what? Dual rate, two-part transfer pricing. This is what? Dual rate, two-part transfer pricing. I hope it is clear. We have one more question. Just read it. Let's read it. Is it a question? Yes, it's a question. So we have one more question. Let's read this question also. I believe they are same, but let's read it. So what is happening here? AEG has a company has two division E and division G. A company have two division E and G, and with a full profit responsibility. They have what? The full profit responsibility. They have full profit responsibility. Okay. So what will happen? Division E produces component E. Okay. They're producing E. And what will happen? Which it sells to outside customer only. Okay. So what is happening? E is producing whatever they are producing, they are selling outside market. I think this is the same question. This is the same question. Let's leave it. You can see the complete same question, right? Division G produces a product called G, which incorporate component E. G is currently purchasing the requirement E from outside supplier. Complete the same question. Let's leave the question. It is completely the same question as we have done here. Okay, so I'm leaving this question. You can read it at your own and you can see there is a conflict. So dual rate transfer pricing, because in exam, this will not be mentioned. Hai na? In exam, this will not be mentioned. So how will you recognize that what you have to write, how you have to decide the transfer price? Kaise pata chalega? So you can see performance evaluation की बात चल रही है, conflict चल रहा है, तो dual rate transfer pricing will adopt it. है ना? When there is a conflict, when they are talking about evaluating the performance of the organization, then the point of transfer pricing will come here. All right. So this is the concept of transfer pricing. Let's take some more other points now. Okay, dear. The next concept. The next concept is related to international transfer pricing. Now, the question comes here, what is international transfer pricing? What is it? What is international transfer pricing? So the question comes here, what is international transfer pricing? What is the use of international transfer pricing? What is it? What is international transfer pricing? So the point is that you can see these days people are working globally. Global business is so easy. Yeah? Why it is all easy? Because the trade barrier have removed. Trade barrier. There is no trade barrier. And communication is easy. Easy communication. Right? Transportation is easy. Even the government, they are encouraging international transactions, right? Point is that it is now, these days, it is so easy for the organization to trade globally. So if you will see now in India also, you can see, and also internet technology advancement, internet helps the people to connect global and to sell their product globally, to get the money very easily, quickly, electronic transfer. Now, in these days, what happened? If you want to transfer the money, you don't need to draw a check. Just transfer it through internet banking. So the point is that it is so easy these days. Transportation is easy, communication is easy, transfer the money is easy, transfer the goods is easy, everything is easy now. No matter someone is sitting from Delhi to US, Delhi to UK, Delhi to Almaty, Delhi to Dubai, it's so easy to transfer the goods. So the point is that this encourage the international transaction. Now, for example, there are some organizations, those who have manufacturing units in different countries. So you can see there are many big global companies like Apple and many other organizations. So I'm just taking the example of Apple because I want to take an example of production. So you can see Apple, they actually sell their product in all across the world, but their production take place in most of the Asian country. So they produce their goods in China. I hope you know that. It was very popular during COVID. So they produce their goods in China. They produce their goods in some other country. Let's take some example. I'm just taking an example. UAE. They have production unit in India, by the way. I don't know that they have production unit in India or not. I have no idea. For example, they have production unit in India. Okay. So now what is happening? For example, they have the production process in this way. Now they have one of the division in China and one of the division is in India. And now what is happening? They need to transfer the goods from one country to another country. So what is happening here? They need to transfer the goods from one country to another country. They want to transfer the goods from one country to another country. All right. So what will happen? So when they want to transfer the goods from one country to another country, at what price this transfer should take place? What price? at what price this transfer should take place when we are transferring the goods from one country to another country. At what price these goods should be transferred. What should be the transfer price? Now the question comes here, people have different currency here. In India, people are using Indian rupees. Here the currency is different. UAE, dinar currency. US have dollar currency. UK have pound currency. Point is that every country have their own currency. And you know that exchange rate, it fluctuates every day. It never remains same, right? $1 is equals to how many rupees? It keep on changing. It never remains same, right? It is never same. It keep on changing. It keep on fluctuating. So under such, and also the tax provisions under different countries is different, right? You know, in US, UA tax rate is very less, or people almost, they don't pay the taxes. In India, we die of paying taxes. We don't receive our salary or the revenue first, and before that, they deduct the tax. Sad, huh? So the point is that tax in different country, you know, approximately 20 to 30% if you have a good earning. Tax rate in different countries is different. People in different country have different currencies, different tax rate. Now the question comes here, if they have different tax rate, they have different currency, and obviously every division wants to earn some profit. On the basis of profit, they will get the appraisals and all. Every division wants to earn some profit also. Under such scenario, how difficult it is to decide the transfer price. How difficult, no? You can imagine. Different country have different currencies, different tax provision, maybe different other companies provision, other act, all are different. And in this case, you need to transfer the goods from one division to another division. And we have to decide at what price we should transfer the goods. It's not easy decision now. All right. Now see what is written here. Generally what happened, actually, we will first see in which country the tax rate is high. We will see in such scenario, country X and country Y. Let's take an example, not India, China. Let's take an example of country X and country Y. So country X and country Y, all right, country X and country Y. Okay, we have two country. And what is happening? Dekho, yahan pe provision dekho. See what is happening here. They are saying tax rate in some country, tax rate are very high. Very high. People have to pay a lot of tax. Can you imagine if someone is earning 1 crore rupees, but he is receiving only 70 lakh? It's not good, right? If someone's salary is, for example, 30 lakh rupees is a salary, and he is paying at least, he is paying around 9 lakh tax. This is the tax. Though his salary is 30 lakh, but he's just receiving 21, 22 lakh rupees something. Not good, huh? You can imagine the scenario. If someone is earning this, but he's receiving this. Someone is earning this, but he's receiving this. Remaining is what? Tax. So the point is that now how to deal with the tax provisions. What they have decided, if in a country the tax rate is high, what will happen? We want to decide the transfer pricing in such a way that the profit should be less. If the tax rate is high, decide the transfer price in such a way that the profit should be less. So that you end up paying less tax. Profit less, so less tax. You will end up paying less tax. And in a country where the tax rate is less, decide the transfer pricing in such a way that the profit will be high. Obviously, in this case also, you will end up paying less tax. Less tax. Why? Because the tax rate is come now. Tax rate is less. So you have decided the transfer pricing in such a way that the profit is high and tax will be less. So profit will be high when the transfer price will be high. And profit will be less when you keep the transfer price as less. Profit will be high and profit will be less. The transfer price will be high in one case and the transfer price will be less in another case. Then what will happen? Transfer price will be high in one case and transfer price will be less in another case. All right. Okay. Now what is happening here? This is how you have to decide. Ab dekho, we have two country. One is what? Receiving the goods. And one is what? Transferring the goods. So here we are deciding these cases for the transferring country. The country or the division which is transferring the goods. So the transferring, the division which is transferring the goods, the country, the division in a country which is transferring the goods to other countries' division. In that case, we will see what is the tax rate of the transferring division. Is it high? The tax rate of a transferring division of the country is high? Or the tax rate in transferring division of the country is less? You will check it. If it is high, if the transferring rate is high, what will happen? If the rate is high, what will happen? If the rate will be less, what will happen? If the rate will be high, tax rate is high, obviously you want to show less profit. Taki kam tax dena pade. If the tax rate will be low, you want to show high profit. Taki tax kam dena pade. So your aim is to pay less tax in both the cases. You want to pay less tax, right? Right? Because you have to pay the taxes in both the cases. Right? You have to pay the taxes in both the cases. You must understand this, right? I hope you're understanding this. All right. Okay. If you will see in your book, it is given, huh? The same thing is given in your book also. The same thing is given in your book also. Let's try to read it from the book also, huh? Let's try to read it from the book also. Okay. So everything, whatever written here, I have taken it from your material. So generally this happen in case of multinational companies. They have the manufacturing organization, manufacturing unit in different country, and they transfer the goods from one place to another place. This happen in multinational companies. Hai na? Okay. So you can see here, it's given here. Taxation, we consider the taxation. Profit repatriations and transfer price are critical consideration to the senior management of multinational companies. Multinational organization try to maximize the profit by using the transfer pricing as a tool to reduce the tax impact on earning. So supplying division or the transferring division is in a country of higher tax rate. Transfer price will be set in a way in order to reflect what will happen. High tax rate, lower in order to reflect higher earning. Dekho, what is given here? Where the tax rate will be high. Tax rate, if the tax rate will be high, transfer price, you will set the transfer price as low, right? That will reflect what? High earning. That will set this earning. That will set the earning as low. Will be set lower. See, given it is given here, transfer pricing will be set lower. Why? In order to reflect high earning resulting in lower tax. We keep the transfer pricing less. If the transfer pricing will be less, for the receiving division, the earning will be less, right? And what will happen? The tax will be less. Earning will be less, then tax will be less. Okay. So what will happen? This will be a lower cost to the receiving division. Huh? This will be what? Lower cost for the receiving division. It will be, it actually, receiving division ka cost, it will reduce, right? And in receiving this division, we assume, for example, the tax rate is less. Okay, cost will reduce. This will increase the profitability, right? But though the profit is high, but the tax rate is less, again, you are saving the tax. So here what will happen? You are saving the tax in both the country. Here, where the tax rate is high, you are saving the tax. Tax rate is high, but still you save the tax. And in the country where tax rate is low, there also you are saving the tax. So actually, this will help you to save the tax in both the cases. Hai na? Give me 1 minute. Let me explain you this also. So what will happen here? We have just discussed this. Ki transferring division, we want to keep the transfer price, transferring or what? Supplying division. So transferring or the supplying division, for the supplying division, we want to keep, if the tax rate is high, what will happen? We will decide the transfer pricing accordingly. Give me 1 minute. Let me try to explain you something. Okay, so generally what happened, for example, country X have high tax rate. Okay. So what will happen? We generally prefer to transfer the goods from a country having high tax rate to a country having less tax rate. We will transfer the goods from a country having high tax rate to a country having less tax rate. What will happen here? We transfer the goods from here to here. A country having high tax rate to a country having low tax rate. So what will happen? This will help here. And the transfer pricing. What will happen? In case of high tax rate, transfer price will be low. So revenue will be low. This will reduce the revenue and whatever the cost they have. Since the revenue is low, profit will be low. Right? Profit will be low. Then what will happen? Tax will be low. Less tax. Tax will be less. Now, since we are transferring the goods from a country having high tax rate to a country having low tax rate, we're transferring the goods to a country having low tax rate. So what will happen in this case? In this case, what will happen? So here, transfer price will become cost. Transfer price is a cost, right? Because this is what? This is supplying division. And this is receiving division. Right? This is receiving division. So what will happen? The transfer price will be cost here. Right? Okay. And the sale, the final sale they have. So what you have done, transfer price is low. So transfer price will be low here also. So transfer price is low here. You have set the transfer price as low. So for both the division, the transfer price is low. What will happen then? So the transfer price is low here. What will happen then? Since the transfer price is low, the profit will be high here. And when the profit will be high, what will happen? You have to pay more tax. Tax will be high. Tax will be high. Here the tax is less and here the tax will be high. पर उससे कोई फर्क नहीं पड़ता. Even if the tax rate is high, the income tax rate is less. Tax rate is high. Sorry, I am so sorry. So what will happen? The profit will be high, but here what will happen? The tax rate is less. Tax rate is less. So what will happen? The tax amount will be less here. Tax amount will be less. So you can see how strategically they have designed it to prevent the tax. To save their tax, how they have designed, how multinational companies, they use the transfer pricing concept to save their taxes. आप देखो है तो दोनों division एक ही company के overall profitability में it will not going to affect, right? This transfer pricing, whatever the transfer pricing they are deciding here will not at all impact the overall profitability of the company. It will not at all impact the overall profitability of the company. Then what will happen? They are considering it. They're just considering it. Why? They are just considering it for the respective division and maybe for here though for the profit also. Here on the basis of the profit, they're paying the taxes. So to evade the tax also or to prevent the tax also, they are using this concept when they have intercompany transactions. How strategically they are using the transfer pricing concept here. It is not impacting the overall profitability of the company and they're using this to save the taxes. They're using this concept to save the taxes and it actually happened in case of the, Starbucks company. You know Starbucks, right? Everyone knows about Starbucks. It's a coffee brand, right? Everyone knows about Starbucks company. And actually, this is a practice adopted by Starbucks to save the taxes. Strategically, they are saving the tax. You can see here, we have an example. See, it is given here. A recent case in a point is the ruling on Starbucks UK subsidiary by British authorities known for their world-famous coffee that generate high margin for the company. Although the management claimed that the business was good, tax record reported losses. मतलब कंपनी के पास प्रॉफिट हो रहा है बट टैक्स के पर्पस के लिए दे आर शोइंग इट लॉसेस. Investigation revealed that UK subsidiary paid its Netherlands unit 6% of sales as royalty for intellectual property such as brand and business process. This agreement of 6% sale is the transfer pricing between the units. So you can see here what is happening. They're using the transfer pricing concept to save their taxes. Though the company was very profitable, I told you that transfer pricing will not impact the overall profitability of the company, but they will use the transfer pricing for saving their taxes. When they have intercompany transactions, when they are transferring the goods from one country to another, they're using this concept to save the taxes smartly. Acha, dekho, now what happened? Obviously, now the country's government are worried about it. The government will be worried. They're always worried about collecting the revenues, collecting the taxes. So what is happening here in India? Such tax avoidance. It's a way to avoid the tax, right? It's a way to avoid the tax. So what is happening in India? Such tax avoidance. So in India, what happened? Such tax avoidance measures are being regulated by the government. India may it's been regulated by the government with the introduction of what? Section 92A and 92F. So by the introduction of these two sections, section 92A and section 92F, CA final, you must have studied about this in income tax, arm's length pricing method. There they have introduced such concept which help to avoid the taxes, tax avoidance strategy, whatever the strategy these companies were adopting to avoid the taxes. So they have introduced this arm's length pricing method, right? And you have studied it in income tax also. I hope it is all clear. Now I have to cover the questions, numerical. So before numerical, shall I take a break? Then can we start, fresh start? Let's take a break. Then we can take the concepts and the questions. Okay, let's take a break because after this, I have a question that will take at least 1 hour. Then in between, we can't take break. So let's take a break. Then I'll come back and then we will resume the class. Hey, hi, welcome back. So let's start. Let's read an example. We have an example here. And then after the example, we will take the questions. We have a question on transfer pricing, international transfer pricing. I have 3 questions. So let's practice those questions. Before that, let's read the example first. Let's try to understand the example that we have here. Before that, do you have any doubt? Do you have anything you want to ask something here? Do you have any doubt? Give me 1 minute, huh? Let me see if you have any doubt. Yes, Arun, we have discussed this in earlier 2 classes that when the receiving division have option to buy the material from outside market, obviously they will buy it outside market if it is getting cheaper. So we have already discussed, we have done some question also in last session. So if you want, you can see the recorded session, right? You will see that we have done some questions where the receiving division have option to get the material at cheaper rate from outside market. So yes, we can have such scenario also. So we have done a question on this also. If you want, you can take the recorded session. Okay. Now let's read the example we have here. Again, when you are reading the question, it may seems to look difficult to read, difficult to understand. But the point is that when you will try to understand, you will find it very easy. Chalo, let's do this question. A manufacturing company has 2 manufacturing divisions in different countries. Division A in India. I think I have not missed something. Give me 1 minute, because I can see some. Give me one. Okay, let me read it. Okay, let's read it. I hope I have not missed something here. Here, I don't know. Okay. Okay, so what is given here? A car manufacturing company has 2 manufacturing division in different country. Division A in India manufactures engines for the car. Okay, it has capacity to manufacture 10,000 units each year. The variable cost of production is rupees 8,000 per unit, and the division can sell 8,000 engines externally to customer within India at rupees 11,000 per unit. The other division, Division B, is in Italy that requires 5,000 engines every year to assemble them further into car. Okay. It purchases these engines from a vendor in Italy at a price that is equivalent to 9,000 per unit. If Division B were to purchase these units from Division A, the transfer price would be rupees 10,000 since no selling expenses. अब देखो when we are reading कुछ समझ ही नहीं आ रहा मैम क्या read कर रहे हो कुछ भी नहीं समझ आया ठीक है so before reading it what I told you start making the diagram start making it so what will happen it will be very easy for you to understand what is given here okay I'll do the same. If you will just read it, kuch nahi samajh aayega. You will understand nothing here. Okay, so let's make a diagram of whatever written here. Chalo, let's make a diagram. So what do we have here? We have a division A. Okay, a car manufacturing company has 2 manufacturing division in different country. Okay, division A is in India. It is in India. So India में क्या हो रहा है manufactures the engine of the car. So in India, what is happening? They are actually manufacturing what? They are manufacturing engine. ठीक है? So they are manufacturing engine. So division A is manufacturing engine for what car? Assume the scenario, right? Assume the scenario. Now, what is happening? It has a capacity to manufacture 10,000 units each year. So what is the capacity to manufacture the engine? 10,000 engine they can manufacture. They can manufacture how many engine? 10,000 unit of engine every year. The variable cost of production is rupees 8,000 per unit. So their variable cost of production is what? Variable cost is what? Rupees 8,000 per unit. This is their variable cost per unit. All right. Okay. Then the division can sell 8,000 units externally to customer within India. अब देखो यहाँ पे they have the option, they can sell it externally. At what price they can sell it externally? They have option to sell it externally at rupees 11,000 per unit. They have the option, they can sell it externally at rupees 11,000 per unit. All right. Next, division B is in Italy. Oh, the other division is in Italy. Division B is in Italy. Okay. B is in Italy. Division B is in Italy. That requires 5,000 engine every year to assemble them into car. अब देखो यहाँ पे क्या हो रहा है? यहाँ पे बन रही है कार. ठीक है? So here they are producing the cars, and for the car they need engine. They need what? Engine. And how many engine is required here? 5,000 unit of engine is required here. They need how many engines? 5,000 engine is required here. All right. Okay. 5,000 engines every year to assemble them further into car is required. It purchases these engines from a vendor in Italy at a price that is equivalent to 9,000 per unit. Oh, now what is written here? They are also buying it from external market in Italy. Where is this external market? It is in Italy. They're buying it from Italy external market. ठीक है, 5,000 unit they are buying it from external market at external market, right? From Italy. ठीक है. Then what is it? Purchases these engines from a vendor in Italy at a price that is equivalent to rupees 9,000 per unit. ठीक है. So 9,000 unit का whatever the price here, they are buying it here. अब देखो here, what is the crucial point to understand? This point in Italy at a price, because the price is not mentioned here, है ना? So this is crucial to understand. What else do we have here? In division B, where the purchase of these units from division A, the transfer price would be rupees 10,000 per unit. Okay. So if what will happen, if they buy it from division A, so what will be the transfer price? If division B is buying it from division A, what will be the transfer price? It is mentioned that the transfer price will be rupees how much? 10,000 per unit. This will be the transfer price that is given here. Acha, what else? Since no selling expenses needed to incur on internal sale, internal transfer, when you're transferring the goods internally, you don't need to pay any marketing expenses, selling expense. Variable cost of such transfer would be, the variable cost of such transfers would be rupees 7,000 per unit. So when you transfer internally, what will be the variable cost? When you transfer internally, variable cost is what? Rupees 7,000. Maybe 1,000 is for marketing expenses. Hai? Okay. If division A accepts the internal order from division B, okay, it will have to curtail some of the external sale. So it has to disrupt the external sale, then only it can produce the goods for internal. All right. It has to interrupt the external sale which it has in the market, Indian market. It has to stop that production. Then it can transfer the goods internally to division B. This is what written here. Then they can transfer the goods internally. All right. Then what is given? Given that the tax rate is 30% in India, India may tax rate is what? 30%. And the tax rate in Italy is 40%. What else? Determine if the company will be benefit overall if division B purchase from division A. अब देखो question same है. We have done such type of questions already. We have already done such type of question. What is new in this question? It is internal transfer of goods, but divisions are in different countries. They are not in the same country. They are in different country. Their external market is in different country. Their tax rate is different. Same question, but see how the scenario has changed. है ना? ठीक है? They are in different country. The tax rate is different. Thank God the currency is given same. Otherwise, it create more confusions. है ना? Okay. Now let's see. They are saying if they transfer the goods internally, then whether the company overall will be benefited or not. Right? Sorry. Okay. So let's do the calculation here. We have to do the calculation for solving it, right? If you want, you can read the question again. I'll allow you to read the question again, and you can read it again. Take your time and read the question again. And see, is it the same scenario I framed it here? Read it and tell me, is it the same scenario? We will discuss. I think I have not given you time to read it. Read it, huh? Okay, shall we discuss this? Yes, shall we discuss? Okay, let's discuss this question. I hope you all have done the reading. Acha, chalo. Okay, let's discuss. So we will find here the profitability of both the division. You can see the scenario. All right, we will find the profitability of both the division. Okay, you can see the scenario. And now with this, I'll try to find out the profitability of both the division. Give me 1 minute. So what will happen? We will see division A, profitability of division A, and division B. And overall profitability also, right? We will see both. Overall profitability also. So we will see everything. We will see what is the increase in profitability if this will happen. If internal transfer will happen, is it increasing the profitability of the company? Say yes or no. You have to check it. Is it same or is it increasing the profitability of the company? I will show you how. See, the point is that if you will see here, the capacity to produce the goods is 10,000. In India, at rupees 11,000, it is given that they can sell 8,000 unit in external market. Okay, very nice. अब देखो, what is given that they have the capacity to produce 8,000 10,000 unit, but they're actually selling 8,000 unit outside market. So point is that they have spare capacity. Division A have a spare capacity. खाली बैठे हुए हैं. They have spare capacity for how many units? If you will see, for 2,000 units, they have spare capacity. For 2,000 units, what is happening here? They have spare capacity. For remaining 1,000 units, they don't have the spare capacity. They have to interrupt the external sale. क्योंकि देखो कितनी, how many units do you want to transfer here? 5,000 units. You have to transfer 5,000 units. So for 2,000 unit, you have the spare capacity, but for remaining 3,000 units, you do not have the spare capacity. ठीक है, तो देखो, if you have a spare capacity, you are happy to transfer the goods at variable cost. But for the other 3,000 unit, you have to interrupt the external sale, and then you can transfer the goods internally. है ना? तो when you are already selling the goods at 11,000. You're already selling the goods at 11,000. You have to interrupt this. Then you can transfer the goods internally, and I can see here the marketing expense. Okay. Here the marketing expense, because when it is given in the question, when you're transferring internally, there is no marketing expense, but when you transfer it externally, there is a marketing expense. Okay. Acha, देखो, it is given that if you want to transfer the goods internally, you have to interrupt the external sales. How many units? For 3,000 unit, you have to interrupt the external sale. Acha, what is the benefit? There is no benefit. I can see something. Why there is no benefit? Whether for division A, they are indifferent for 3,000 unit, whether transfer outside or transfer internally. In both the case, they are earning the same contribution. How, man? Okay, let me show you. So for the 3,000 unit, whether they transfer it, whether they sell it externally or they transfer it internally, the contribution is same, but they have the benefit here. They have the benefit here because in this case, what is happening? In this case, what is happening? It is increasing the contribution. Why? Because variable cost is what? Variable cost is your rupees 7,000, and you are able to transfer the goods at rupees, transfer price is what? Rupees 10,000. This have been decided that the transfer price will be how much? 10,000. You can see ऊपर given है ना, that they agree to transfer the goods per unit is coming as 3,000 per unit. For the 2,000 unit which you are transferring internally, there is increase in benefit, है ना, contribution increase हो रहा है. Because instead of variable cost division A, their expectation, their minimum expectation for 2,000 unit, खाली बैठे थे ना, when you have a spare capacity, minimum expectation is variable cost. But instead of variable cost, the transfer price is this. So they have a benefit, right? Division A have a benefit on these 2,000 unit. They have a benefit on these 2,000 unit. How much benefit or incremental benefit I can say? On 2,000 units, this is incremental benefit for the division, है ना, for 2,000 unit. अच्छा, now what about 3,000 unit? क्योंकि मैम 5,000 unit they are transferring. चलो, let's talk about the remaining 3,000 unit, है ना, for division A. Let me remove this first because I need space. So for remaining 3,000 unit, you know what is happening? For remaining 3,000 units, the company have two options. Either they can sell it externally or they can transfer it internally. When they are selling it externally, they are selling it for rupees 11,000. And when they are transferring it internally, they are transferring it at rupees 10,000. Given enough, I'll show you. Dekho. When they are selling it outside market, they can transfer it, they can sell it at rupees 11,000. But when they are transferring it internally, they have the option they can transfer it at 10,000. है ना? अच्छा. In this case, when you're selling externally, the variable cost is 8,000. Maybe the reason is that selling expenses is included, variable selling expenses or marketing expenses included, because when you want to sell it outside market, you have to do some advertisement, marketing, है ना? So the variable, this is what transfer price. This is the final sale price if you sell it outside market. This is what the final selling price. When you sell the goods outside market, this is the final selling price. And the variable cost here is what? Rupees 8,000. So the contribution is what? Contribution is rupees 3,000. You can see. Here, the contribution they're earning is 3,000. Achha, what is the contribution in this case? You can see here the variable cost have been reduced. Transfer prices, this variable cost have been reduced as 8,000. Okay, so what is it coming? No, not 8,000. It is 7,000. Transfer, you can see variable cost here is 7,000. So the variable cost is here is 7,000. Contribution is coming as rupees 3,000. So rupees 3,000 is contribution if you transfer the goods internally, and if you transfer the goods externally, then also the contribution is same. So you can see here for the remaining 3,000 unit, division A is indifferent. ठीक है, कुछ भी चलेगा, चाहे तो यही बेच दो, चाहे तो इंटरनल ट्रांसफर कर दो, उसको कोई फर्क नहीं पड़ रहा है, क्योंकि प्रॉफिट इंक्रीज नहीं हो रहा है उसके लिए. दोनों के केस में द प्रॉफिट इज सेम, राइट? देयर इज नो इंक्रीमेंटल प्रॉफिट इन दिस केस फॉर द रिमेनिंग 3,000 यूनिट. There is incremental profit for the 2,000 unit, क्योंकि 2,000 unit की minimum expectation his was to recover the variable cost. He was only expected to recover the variable cost, but he is recovering more than variable cost. The transfer pricing is what? The transfer price here is transfer price is 10,000, but his variable cost was only 7,000. Why are you not considering 8,000, ma'am? Because 1,000 here, 1,000 cost, variable cost ke andar 1,000 is for marketing, advertisement. So you will incur the marketing expense when you will sell it market mein. But when you are transferring internally, same organization ke andar, you will not incur marketing expenses. So variable cost will be 7,000, 3,000 will be the increase in contribution which is earned by Division A. Division A is earning this. This is incremental benefit. This is what increase in benefit to the Division A. Are you getting it? Please write in comment. I just want to know that you are understanding it or not. So the point is that no need to consider this now. There is no need to consider this because in both the cases, whether you transfer it internally or you transfer it outside market, in both the cases, Indian division is indifferent. Usko koi fark nahi pad raha. In both the cases, his contribution is same. Whether he transfer internally or whether he sell the product outside market, he's indifferent. Right? So what is the increase in revenue for Division A in India? 60,000 is increase in revenue in Division A in India. On this, he will pay the tax. How much? 30%. So what will be the tax and what will be the amount after tax? So this will be the amount after tax he is earning. After tax increase in revenue. Rupees 42 lakh. This is what increase in revenue after tax. This is what increase in revenue after tax. All right. Okay. Division A. Now, Division B. I hope it is clear. So this is the benefit of Division A. Now let's talk about Division B, whether they are having the benefits or they are in loss. So let's talk about Division B. What is happening in case of Division B? Division B have the option, they can buy the same product from external market. Kitne price mein? They can buy the same product in Italy equivalent to 9,000 unit. Okay, so here what will happen? You have to calculate it. At what price the product will be available in Italy? You have to check it. Acha, it is in rupees given. Okay, I'm so sorry. So actually it is given that Italy at a price equivalent to how much? India ke rupees se they have making the comparison. They are buying external market mein, Italy ke external market mein, they can buy the same product at rupees 9,000. Comparison, they have done the comparison. Oh, can you see? Italy division end up paying more money. Agar tax rate na ho, this is not a good transfer. If you will not consider the tax rate, it is not a good transfer. Because in Italy, you can buy it for 9,000. Why are you buying it from India for rupees 10,000? So what is happening here? Increase in cost, not increase in benefit. Because of internal transfer, there is increase in cost. How much cost is increasing? In Italy, they can buy it rupees 9,000, but they are buying it from outside. So in Italy, they can buy it for rupees 9,000, but they are buying it from India at rupees 10,000. So here what is happening? They end up paying more money. How much? 1,000 per unit. Here what is happening? They end up paying more money on the units they are buying here. How many units they are buying here? 5,000 units. So they are buying from India, they end up paying more money to Indian government. Indian division, they end up paying more money to Indian division, 1,000 more money they are paying. So total, how much more money they will end up paying? Total, they will pay total increase in cost. So total increase in cost will be what? Rupees 1,000 into 5,000 units. Right? This will be what? Rupees 50,000. This will be rupees 50,000. Increase in cost is here rupees 50,000, 50 lakh. But cost is increasing, they will save the tax. You know, na, when the cost increases, because of cost, there will be some tax saving. Hai na? So tax saving because of increase in cost, what will be the tax saving here on this cost? Tax rate is 40%, so you will save the tax of 40% on this. Rupees 20,000. This will be the tax saving because the cost is increasing. This will be the tax saving. So what will be the net incremental cost? Net of tax will be what? Rupees 30,000. 30 lakh. ठीक है, देखो, what is happening now? If the internal division transfer from India to Italy will happen, there is increase in revenue of 42,000. So what will happen if inter-divisional transfer from India to Italy will happen? What will happen? Right? What will happen then? Increase in revenue. How much revenue is increasing? Rupees. This will be increase in revenue. Incremental revenue, this will be increase in revenue. And less increase in cost. Overall organization, we are considering it from the point of view rupees 30,000, 30 lakh. Increase in cost. So increase in benefit, net benefit. Will be rupees. Net benefit will increase by rupees 12 lakh. This will happen here. Simple, right? So you can see here, it will increase the net benefit of the company by 12 lakh. Good for the company. Ab dekho, what happened here? Though I told you that the transfer pricing set here is not good. The transfer pricing set here is not good. Why? Because this division A had a spare capacity. Khali बैठे थे. Marginal cost recover हो जाए बहुत है. Right? Division A, if division A is recovering the marginal cost, it's sufficient for them. And division B is end up paying more money to Indian division. Still it is beneficial. Why? Matlab, if you will see, according to transfer pricing, this is not good. But still you can see the benefit is increasing for a reason because of tax rate. If you are transferring the goods from a country having less tax rate to a country having high tax rate. This is a question where the supplying division have less tax rate and the receiving division have high tax rate. And we have learned that actually the tax rate have also the impact on the profitability of the company. So what happened? You reduce the transfer pricing. Instead of 11,000, we have reduced the transfer pricing to some extent, though it is high here. But what is happening? It result in saving. It is, though it is actually increasing the cost. If you will buy it from external market, the cost was less. It is actually 50 lakh cost increase हो रहा है. But what is happening? 30 lakh cost is increasing, but net off there is benefit. And why the benefit is coming? Because of the tax rate. Because the tax rate in both the country is different. For that reason, there is net benefit for the overall company. Right? But if the tax, for example, if the tax rate will not be given here in the question, if there is no tax rate, then you do the calculation. It will not be beneficial for the company if the tax rate is not given here, if there is no tax rate. And then solve the question. It will not be beneficial for the company. Overall, it will not be good for the company. Not a good decision for the company. So why it is coming as a good decision? Because the tax rate in both the supplying and receiving division is different. The tax rate is different. Okay, so actually the tax rate is creating an impact, because of which there is net incremental benefit here. That's it. I hope it is clear. Do you have doubt? Any doubt here? I'll take the next question if you don't have any doubt. Yes, do you have any doubt? I'll take the next one. So I expect all of you to read this question, and I'll please read the question. Read the question. Take your time and read the question. Okay. I hope you have done the reading, huh? Okay. Let's understand the question now. I told you before solving this question, make a diagram. I told you from the beginning. Okay? If you will draw it, you will try to assume the scenario. It will be very easy to solve it. They're not at all difficult question. You can see from the beginning, we have done nothing. It is so simple question. They're all so simple, right? They are such a simple question. What you have to do to make it simple? Just to assume the scenario, make the scenario in your mind, right? And better draw it, right? Okay. Let's make the question. So we have a company. Let's read it. What is happening here? ABC Miners is a company. Start making the diagram. ABC Miner is a company. It's a company. Okay? It operates two divisions, one in Japan and one in UK. Acha. So one of the division is in Japan and one of the division is in UK, right? Mining division is operated in Japan. So in Japan, there is a mining division. Okay. Which is rich of raw emerald. Okay, is a material. Okay, it is rich in emerald. Emerald. They are rich in emerald. Okay. Then other division in UK processing division. ठीक है. So in UK there is a processing division. So in UK there is a processing division. It processes the raw emerald into polished stone. So they are converting the emerald into what? Polished stone. So polished stone is a final good we have. Okay, polished stone. Fit for human wearing. This is good for human wearing. The cost detail of these two divisions are as follows. And then you have the cost details. What are the cost details? What are the cost details we have here? So, okay. So the cost detail is what? Japan mining division per carat of raw emerald is what? The variable cost is 2,500 here. Okay. So the variable cost here is what? The variable cost here is 2,500 yen. And the fixed cost here is what? The fixed cost here is. And the fixed cost here is what? 5,000 yen. Okay. Then the variable cost here, processing division in UK, variable cost here is what? Pound. Currency is different now, right? Last example was very simple because the currency was simple. Same currency. It was all given in Indian rupees. But here, what is happening? Currency is different, right? So variable cost for processing division is 150 pound. And the fixed cost here is what? 350 pound. Okay. Several polishing companies in Japan. Several polishing companies in Japan buy the raw emerald from local mining companies at rupees 9,000 per carat. That means it has an external market. There is an external market exists for this product. There is what? An external market for this product. What is the external market for this product? There is external market exists for this product. Okay. It is given here. And in external market, at what price they are buying it? Not rupees, 9,000 yen per carat. 9,000 yen per carat is the price at which the other people are buying it. Maybe it is the selling price, you know, because other people are buying it at this price. So the company has managed to sell it at this price in the market. This is what? Selling price. Okay. So it is given, right? You can read it. Several polishing company in Japan buy raw emerald from local mining companies at rupees 9,000 yen per carat. Okay. Then what is given here? Current foreign exchange rate is what? 50 yen is equals to 1 pound. So 1 pound is equals to 50 yen. This is given here. Okay. Income tax rate is 20% in Japan, 30% in UK. Okay. So the tax rate is what? Tax in Japan is 20%. And the tax in UK, 30%. All right, tax rate is 30%. What else do you have here? It takes 2 carats of raw yellow emerald to yield 1 carat of stone. अब देखो यहाँ पे for 1 stone 2 emerald is required. For 1 stone 2 emerald is required. All right, what else do we have here? Polished emerald sells 3,000 pound per carat. Sale price is given. A polished emerald, the polished stone, sale price is what? Sale price is what here? Sale prices 3,000 pound. ठीक है, it is given. What else do you have here? One polished stone is equals to 2 emerald. This is given, right? Okay. What else do you have here? Compute the transfer price of 1 carat of raw emerald transferred from mining division to processing division under two method. A, 200% of the full cost, and the second one is market price method. So what is given here? They're asking you to compute the transfer price of 1 carat of raw material. They're asking you, now they're asking you to find the transfer price. This is now quite complicated to solve it. They're asking you to find the transfer price. Okay, transfer price of 1 carat of raw emerald from mining to processing division from Japan to UK. What will be the transfer price under two method? First method is what? Consider the full cost, 200% of the full cost. Okay, first method is 200% of the full cost. Matlab, first you have to find out here what will be the full cost, and then 200% of the full cost will be what? The transfer price here. And the second one is what? On the basis of market price, you are deciding the transfer price. So we will find two transfer pricing here using the two method. First method and second method. Okay. Then what do we have here? 1,000 carats of raw emerald are mined by Japan mining division and then processed and sold by UK division, processing division. Compute after tax operating income of each division. So in first case, they're asking you to transfer pricing, and in second case, they're asking you what will be the profit if they're transferring 1,000 carat of raw emerald. How many emerald? If they are transferring 1,000 carat of raw emerald. This is the scene. Okay, this is the scene. If you want, you can go through again. Read it again. I'll give you time. See, the point is that I know when we are practicing the question, we need time to read it so that we can understand our own. So I want you people to read it again and see this. You can compare the scenario. Is it the same thing which I have created here? And is it the same scenario I've created here? Read it and try to understand. Okay, read it. Okay, shall I help you? So first is what? In first case, they're asking you that what will be the transfer price when the method is what? The method is consider all the cost and 200% of the cost is consider, right? You have to consider 200% of the cost. Okay. This is the method. Yes. Do you want to try this? Okay, try this and tell me. Let me see. Ma'am, please explain this. You know. Okay, see, Janvi, whatever your doubt is, I'll cover, no problem. I'll cover that question. Let me first finish the topic which I have been allotted to cover, right? Let me first finish the topic which I have been allotted to cover, then I'll cover it, huh? Okay, so let's see. This is such a simple question, not at all difficult. What is given in first case? They're asking you what? In first case, they're asking you compute the transfer price. And first method is what? 200% of the full cost. Okay. Achha, now, if you will see the scenario, check here, what is the full cost for the mining division? In this scenario, check what is the full cost for the mining division. So I can see for the mining division, this division. For the mining division, what is the variable cost? 2,500 yen is the variable cost. What is the fixed cost? 5,000 yen is the fixed cost. So what is the total cost? 7,500 yen is the total cost. Right? 7,500 yen is the total cost for the mining division. What is given here? That first method is what? The transfer price should be what? 200 times of the total cost. You know? This is given here. What is given here? That the transfer price will be what? 200% of the total cost. Total cost is what? 7,500 yen. This is the transfer price which you have to set. What is it coming? Let's calculate it. 7,500 into 2. 15,000 yen. Right? This is coming as the transfer price in first method. If you follow the first method, this will be the transfer price. Now, what will be the same transfer price for UK? Convert it in UK currency also. Matlab, convert it into pound also. So, you know the exchange rate, right? It was mentioned in the question. The exchange rate was what? In 1 pound, there are 50 yen. So, divide it with 50 yen. You will get the currency, matlab you will get the transfer price in pound also. So 1,500 divided by 50, 300 pound. £300. Okay. So either you can say 1,500 yen is the transfer price. All right, either this is the transfer price in yen currency, in Japanese currency, transfer price will be 1,500 using the first method, total cost into 200. It is mentioned. And if you will see in case of UK, if you consider it in pound, it will be coming as 300. Transfer price is coming as 300. So this will be the transfer price here in this case, using what method? The first method, which was your 200 and full cost method. Okay, so we have done the first one. Let's see the second case. Second case is what? They're saying that transfer price should be on market price. Whatever is the market price, that will be the transfer price. So this is the second case. So the second case is transfer price will be market price. What is the market price here? You can see the market price here. At what price they are selling the goods in the market? 900 yen. They're selling the goods in the market for 900 yen. So the transfer price using the market price method will be 900 yen. So the transfer price will be 9,000 yen. So the transfer price, in external market, they managed to sell it at 9,000 yen. So the 9,000 yen will be the transfer price per unit. All right. And if you want to convert it into dollar, you can convert it into dollar by dividing it with 50 yen. Right. What is it coming? 9,000 divided by 50. £180. So if you consider market price on the basis of market price method, the transfer price will be either 9,000 yen or it will be £180. So the transfer price using the second method will be what? Either it will be 9,000 yen or it will be £180. Either it will be 9,000 yen or it will be £180. This will be the answer. All right. I hope it is clear to all. You can see. Okay. So either it will be what? 9,000 yen or £180 if it is market price method. If it is full cost method, 15,000 yen or £300 will be the answer. So in this way, we can find the transfer price. You can see, so simple, not at all difficult. But I told you, before solving the question, what will be clear? Before solving it, your question should be clear. Your question should be clear to you. Then only you can solve it easily. Then only it is possible for you to solve it easily. Now, what is the next part of the question? In next part of the question, what they're asking? 1,000 carats of raw emerald are mined by Japan. Okay, and then processed and sold to UK. Compute the tax operating income. मतलब अब देखो, they are asking you to prepare a cost sheet and find the income of both the division and then overall also. है ना? Let's do it. I'm just writing it through the table. So I'm just preparing the table and let's find out the income of both the division. Income after tax for both the division. And overall also, right? Overall also, we are considering for division in India, mining division. Right? We have a mining division and we have processing division. Point is that answer will be different in case of different transfer pricing, and total. So here I'm assuming what? If transfer price is 200% of total cost. Okay. Total cost. If the transfer price will be 200% of the total cost, then in such case, compute the operating income net of tax. Okay. And let me take the second scenario also. So the second scenario is what? If the transfer price is what? Market price. In both the cases, you can find the profitability after tax. In one case, in first case, it will be what? When the transfer price is 200% of the total cost. And in second case, what will happen? If the transfer price is market price. We have two scenarios, right? Acha. We have two scenarios. So what will happen? We will create it for both the scenario. We can find the profitability net of tax in both the scenarios, right? Okay, let's do this. And it is not just enough. Point is that you can do the calculation using both the currencies also. You can do it by considering the currencies also, their respective currencies. Okay, I should add one more column here. Okay. Okay, let's do this. So the point is that we have to calculate it in both the currency also. Chalo, let's do this. In first case, what we have assumed, the transfer price will be what? In first case, the transfer price we have assumed it as 7,500 yen. No, 1,500 yen and 300 pound. Okay. 1,500 yen and 300 pound. Okay. This is what we are assuming. Transfer price. So transfer price is this. Okay, now let's solve it. We know the variable cost, we know the fixed, we know the tax rate, right? We know the cost, every cost we know about it. We know the variable cost. Okay, we know the fixed cost. Okay, and we know the sale, the revenue for them. And this will give you what? Less cost. This will give you what? Profit. And you have to find the tax. You have to consider the tax so that you can get profit after tax. Okay. All right. So revenue is what here? If it is what? 1,500 yen. Okay. Over 300 pound. Okay. This is what? This is the revenue of mining division. And this will be what? The cost. This will be the cost for processing division. What? 1,500 yen, or, you know, we will consider here in pound. How many pound? 300 pound. is what you know. Transfer price will be the revenue for one division and it is a cost for another division. So for one division, we have considered it as a revenue. For other division, we have considered it as a cost. All right. Okay. Now check what is the variable cost here. What is the variable cost here? 2,500 yen. We will see what is the fixed cost here. 5,000 yen. Right. And this is not applicable here. Okay. And for this, we will see 150 pound is the variable cost and 350 is pound is the fixed cost. And 300 pound we will consider here. Okay. And is it given? Acha, 300 pound is for 1 unit. Point is that we are using 2 units for the production. So we have to multiply it with 2, hai? Because we are using 2 units here of this for one production. I hope you are getting that why I'm considering 2 units. And then let me see what is the final sale value, 3,000 pound. All right. I hope I have not done any mistake or something. I have taken the correct values. Final sale value is 3,000 pound. Is it mentioned somewhere? Yes, per carat. All right. Is that all okay? Now see what is the tax rate. See the tax rate and accordingly decide it. Okay. See the tax rate and accordingly decide. Give me 1 minute. Okay. Okay. All right. We have nothing to consider now, right? What do you have to do? Find the profit now. First, then consider the tax. What is the tax rate? In both the country, in Japan, 20%, and in Japan it is 20%, and in Italy it is 30%. Okay. So these are the tax rate mentioned in the question. All right. Let's first find the profit. So what do you have? You have the currency in yen. Consider the yen, 1,500 minus 2,500 yen minus 5,000. Do the calculation and tell me what is it coming. Acha, it is not 1,500, it is 15,000. I'm so sorry. So you can see the transfer price is 15,000, not 1,500. 15,000 yen and 300 pound. Okay. You're not even correcting me, huh? So 15,000, we have decided the transfer price will be 15,000, right? You can see here it was 15,000 or 300. Okay. Let's consider the value. So find the profit considering these values. 15,000 minus 2,500 minus 5,000. This will be coming as 7,500 yen. Right? Now pay 20% tax on it. 6,000. Net of tax, this amount is coming as 6,000 yen. Net of tax, it is coming as 6,000 yen. All right. Okay. Now let's see what the amount is coming in pound. 3,000 pound minus 150 minus 350. This is coming as 2,500 pound. All right. No, not 2,500. We have not considered this one now. 300 into 2 will be 600. So minus 600 pound. So this is coming as 1,900 pound. So this is coming as 1,900 pound. You can see before tax. 1,900 pound is before tax. What is after tax? 30% discount. 30% minus that. 30% minus will be tax. Minus 30%. 1,330 pound. So this will be what? Net of tax. This amount will be net of tax. All right. That's it. That's it. If the transfer price will be 15,000 or 300 pound, right? This will be the case. It's a change scenario. If it is market price, what was the transfer price? 9,000 yen or 180 pound. 9,000 yen or 180 pound. Or $9,000 or 180 pound. Okay, we have decided it. Okay. And let's write it. Revenue will be this and less cost. So this is a case when the transfer price is what? Market price. So cost is what? Variable cost. Then you have the fixed cost, right? And the raw material cost, which is the transfer pricing. Okay. Will give you the profit and then profit after tax. Right, which is what? 20% and 30%. Okay, which is 20% and 30% here. So this will be coming here. You know, transfer price will be revenue for one department and it's a cost for other department. So we are just considering it as a cost for other department, yen or 180 pound. Right? So it's a revenue for one department and it's a cost for other department, right? Okay, at what price we are selling it? 3,000 pound. We are selling it for 3,000 pound. What is the variable cost here? 2,500 yen is the variable cost and 5,000 yen is the fixed cost, right? And here what will happen? 150 pound is the variable cost and 350 pound is the fixed cost. Okay. So these are the costs. Now what do we have to do? Find the profit, net of tax. You will got the answer. Point is that you can see how simple these questions are, right? They're not at all difficult. Matlab, from the beginning, I'm telling you, transfer pricing is the simplest topic. You have to do nothing. Either you have to decide the transfer price or it is given in the question. Like here it is given. Transfer price will be 200% of the total cost or transfer price will be market price. It is given in the question. A transfer price is given. You just have to find the profit, net of tax. Such a simple question. And similarly, either they will ask you to find the profit and transfer price will be given, or they will ask you to find the transfer price, right? And in case if they ask you to find the transfer price, you will see, okay, so if there is spare capacity, transfer price will be variable cost. If there is no spare capacity, transfer price will be market price. Khatam. Bas, itna sa. Right? You can imagine such a simple topic. We have nothing, right? Okay. Let me calculate it quickly now. The profit, 9,000 minus 2,500 minus 5,000. It is coming as 1,500. Now let's see what is the value net of tax minus tax is 20%. 1,200 yen. So this is the value coming here. Let me see what is the value coming here. 3,000 pounds minus 150 minus 350 minus 180 minus 180. 180 two times because we are using 2 unit. 2140 pound. Okay, let me do one thing. We have to multiply it with 2. I have taken 182 times, right? Because we use 2 units for the production. And divided with minus 30%. Minus 30%. So what is it coming? 1498 pound. 1498 pound. Simple. Done. Right? So this will be what? Profit after tax. Simple. Right? You can see these are very simple questions. They're very simple, right? The way of presentation may be different, right? You can see here that the way they have presented it different than the way I have presented it, right? And I have just calculated these values. Let me give me 1 minute, huh? Let me make the comparison. So 6,000 yen, right, was my profit of mining division when the transfer price was total cost 6,000 yen. Okay. Then in pound it was 1330 pound. You can see it is coming as 1330 pound when we are transferring this or this. This was the price. In yen it was 15,000 yen, and in pound it was 300 pound. So in both the cases this was the profit after tax. And in case of 9,000 yen and 180 pound, the profit is what? 1,200 and 1498. You can see it is coming, huh? 1,200 and 1498. Now, after this, you have the option, you can convert the yen into pound or pound into yen, right? To find the total profitability of the company. Now, what is happening here? You can see the company have converted. Achha, they have calculated the total value because they are producing 1,000 carats and here half of the amount, because from the 1,000 carat of raw material, right, they can produce half of the units of final good, because 2 raw material is required for 1 final goods. So out of 1,000 raw material, they can produce half of the final good. They can produce half, 500 final goods. Here they can produce 500 final goods. So 500 they have taken here, they have multiplied it respectively to get the total revenue and total profit. To get the total profit, they have multiplied it. And if you want, you can convert it in a currency. Like everything they have calculated in pound. So you know the conversion rate, 1 pound is equals to 50 yen. They have already given you. Okay. So just divide this value with 50. You will get the value in pounds. Divide this value with 50. You will get the value in pound. what? 50. Wherever you have yen, you can convert it into pound. Divide it into 50, you will get it into pound. Simple, right? If you want, I can do it completely, huh? So here we know the profit after tax. Let me make it complete. So we have raw material 1000 unit. Raw material, how many units? 1000 units. Okay, and the final sale value, final profit is here is what? The final profit is coming here is 6000 yen after tax. Right? Multiplied to get the total profit. Okay. And divide it with 50. Six zero 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 zero. Okay. So this will be what? Yen. Okay. This is yen. Take a total profit. Now, if I'll divide it with 50 yen, what will I get? I'll get in pound. I'll get the value in pound. £120. Yeah, okay. Now, this is already in pound. How many units of final good we are producing? Processing division have the final goods. And here we have what? Processing division. They have the final units. So 1330 pound is the profit of 1 unit. And here we are producing 500 final good. You can just multiply it. You will get 665 pound. Okay. So this will be your total profit, not revenue. This is the total profit in pound. Okay. This is the total profit in pounds. Similarly, you can do it for here also. How many units we are producing? So here again, we have 1000 unit profit, total profit. Profit is what? 1200 yen. And we have 1000 units. So total profit will be, if you just multiply them, you will get the total profit. Okay. This is the total profit divided with 50 yen. You will get the profit in pound, right? Total profit in pound. Okay. Okay. So here this will be 1200 yen. Divide by 50 yen. So this will give you the value in pound. Give me 1 minute, huh? In pound, the value in pound. Simple. Here we have, okay, let me take the next question. A small question I will take quickly, huh? 500 pounds after this. Just multiply it, you will get the value in pound. You can see, so simple. कुछ भी नहीं किया इस question में. They have done nothing, right? Such a simple question. So you can imagine how simple question you get in exam, and it is just a fear in your mind. Transfer pricing, this topic is just a fear in your mind. If you will see, if you try to understand, you'll find it. Then nothing. There's such a simple type of questions, right? They're not at all difficult, right? It's not at all a rocket science. We are not preparing a rocket here, right? They're very simple. Okay, so let me do one thing. We have 15 minutes. Let's take a question quickly, huh? Let me take one question quickly. Okay, let's consider this one. International transfer pricing. Give me 1 minute, huh? Let me see which one I take. Okay, so we have this question in our, you can see it, this question has already came in April 2019 exam question, which we have just done was an exam question. It came in your exam, and you can imagine 10-15 marks is free marks, right? You can get it very easily, right? It was in mock test paper, and it was okay. Now let's do this. So what is happening here? High Life Corporation Incorporation is a US based multinational company. So the name of the company is what? High Life Corporation. This is a company. So what is happening here? It's a US based company. It is a US based company. What is happening here? It is engaged in manufacturing and marketing of printers and scanners. It is engaged in what? It is engaged in producing the printers and scanner. Okay. It has a subsidiary spreading across the world. Okay. The company have a subsidiary all across the world. Okay. Which either manufactures or sell the printers and scanner using the brand name of HCI. Okay. They are using a brand name, High Life Corporation Incorporation, HCI, and they have a subsidiary all across the world. ठीक है, आगे क्या है? Indian subsidiary of HCI buys an important component of printers and scanner from Chinese subsidiary MNC. Okay, so there is an Indian subsidiary and a Chinese subsidiary. Indian subsidiary is buying from China. ठीक है, Indian subsidiary buy this much of units component from Chinese subsidiary. देखो, let me make a picture now. So what is happening? There is a China subsidiary and there is India's subsidiary. Okay. What is happening here? Actually, Indian subsidiary is buying from China. They are buying from China. Okay. So what is mentioned here? That Indian subsidiary buy an important component of printer and scanner from China. Indian subsidiary buy 150,000 unit of component per annum from the Chinese subsidiary. How many units they are buying? 150,000 units. Right? These are the number of units they are buying. 150,000 units they are buying. What else is mentioned? Chinese subsidiary at 30 per unit Chinese currency. What is the price at which they are buying? 30 Chinese currency per unit. At this price they are buying. And pays total custom duty of 20. अच्छा, इसके अलावा they are paying custom duty also. How much custom duty? Because India में तो custom duty लगता है, right? So when they are importing from China, they are paying custom duty. And if you buy something from China, the custom duty is very high, right? So 29.5% is the custom duty, okay, of value of the components purchased. ठीक है? A Japanese MNC which manufacture the same component which is used in the printer and scanner has manufactured unit in India and is ready to supply the same component to Indian subsidiary. Oh, now what is given here? Indian subsidiary have the option to buy the same material from other company, other MNC. कितने price में? They can buy it for rupees 320 per unit. They have the option to buy it internally, India के अंदर ही, they have the option to buy it India के अंदर ही for rupees 320. इतने का they can buy it from Indian company. Okay, what else we have? HCI is examining the proposal of Japanese manufacturer and ask its Chinese subsidiary to present its view on this issue. Right, okay. The Chinese subsidiary of HCI has informed that it will be able to sell 1,20,000 units of the component of the local Chinese manufacturer at the same price, but it incur inland taxes of 10% on the sale value. See, what is informing? Chinese company is informing something. What is informing? So Chinese subsidiary has informed that it will be able to sell 120 units of the component to local Chinese manufacturer if they will not transfer the units to India. They have the option to sell it in their local market. How many units? But they can sell only how many units? They can only sell 1,20,000 units. They can sell it in the local market, but they have the option to sell only 1,20,000 units. All right, of the component in the local market. They have the option to sell it in the local market, only 1,20,000 unit at the same price. And the price is what? Acha, same price mein. Acha, they can sell it outside market at yen, Chinese currency, yen, 30 per unit yen. They can recover it. At the same price, they can sell it in the local market. Okay. At the price at which they are transferring it in India, they have the option, they can sell it at the same price in China also. But the demand is 120, not 150. Okay. What else? Acha, one more point. But it will incur a tax also, 10% on sale value. Oh ho. Matlab, what will happen? They will sell it for 30 plus they have to pay a tax, sales tax. So the sales tax is what? 10% is the sale tax. So it will be around, the sale price in the local market will be around 33 yen per unit. Right? This will be around 33 per unit. What else do we have here? The variable cost per unit of manufacturing the component is 20 per unit. Variable cost is also given here. Variable cost is 20 yen per unit. What else do we have? The fixed cost of the subsidiary will remain unchanged. The corporation tax and currency exchange rate is given. Corporation tax rate, China mein the tax rate is 25%. In India, the tax rate is 34%. And the currency conversion is also given here. $1 mein how many rupees? and $1 में how many currency? So you can find the currency exchange rate between the China and yen and rupees. You can find the currency exchange between yen. If 1 yen is equals to how many rupees? 61.5 divided by 6.25. Just divide it, you will get the currency exchange rate between India and China also. $9.84 is the currency rate conversion. 9.84. So we can say 1 yen is equals to 9.84 rupees. This is the conversion rate between what? India and China. Now, what do you have to do? Let's see the requirement of the question. ये तो हमने case scenario we have understood. If you want, I can repeat again. So what is happening here? China is a country and India is a country, and India is receiving their raw material from China. Okay. At what price? 30 yen per unit, but they have to pay 29.5 custom duty also. So the total price at which they are receiving it at this. You can convert it into Indian rupees, then you can compare, because external market when the same product is available at 320. Convert this yen currency into rupees and make a comparison. Is it profitable to buy it from China or is it profitable to buy it locally? So you can make a comparison for India. Similarly, you can make a comparison for China also. They are selling it to India and the revenue they are collecting is 30 per unit. And here they are collecting the same revenue. But what is the loss of this, of China company? What is their loss? If instead of transferring the goods in India, they are selling it locally, there will be a loss of sale of 30,000 units. They will not able to sell this 30,000 units. This will be their loss, because locally they can sell only 120 units, while in India they are transferring all their 150,000 units. So this is their loss, right? They will lose this profitability which they are earning on 30,000 units. They will lose this. Okay. But let's see the question. Let's see what they're asking you actually in the question. Let's see, accordingly we will frame it. Let's see what they're asking. Now the question is that prepare the financial appraisal of the impact of the proposal by the Japanese manufacturer to supply the component of printer to India. Matlab, first find the income statement, prepare an income statement when you are transferring 150,000 units to India. When China is transferring India 150,000 units, what is the profitability of the company? No, give me one minute. Japanese manufacturer is who? Japanese manufacturer. Okay. So when India have option to buy it from Japanese manufacturer, this MNC is Japanese company. Okay. So the first scenario is what? Not this. Okay. The first scenario is what? If the Indian Indian subsidiary, instead of buying the product from Japan, 150,000 unit, it buy locally from Japan MNC. So instead of buying it from China, if it buy locally from Japan, what will happen? Prepare a financial statement for the impact of proposal of Japanese manufacturer to supply the component of printer and scanner to Indian company. Bas itna you have to do. Ki instead of buying it from China, if it buy from Japan, what will be the profit? You have to do the calculation. So same karna hai. Convert this yen into rupees. See, is it profitable to buy it from Japan? How much profitable? How much profitability is increasing? Right? Accordingly, you will make a decision. Okay, it is more profitable to buy it locally for Indian subsidiary. Then identify other issues that would be considered by the company in relationship of the proposal. Other issues matlab maybe the overall profitability get impacted, or other issues. Maybe the quality may be sacrifices if you buy internally, or maybe you will get more better quality. So other issues. Impact of the proposal by Japanese manufacturer to supply component to the Indian supply. Acha dekho, this entire question is on the basis of what only they are asking about the India and Japan. Matlab they are just asking about this point of view. They're not asking about the China point of view, whether it is profitable for China or not. They're just asking from Indian point of view, whether it is profitable for Indian or not. Okay. How will you do it? Let me quickly tell you. Acha, what will happen in this case? Let me quickly tell you. So what first you do one thing, convert this into rupees, right? You know that you are paying 30 yen per unit, plus you are paying 29.5% custom duty. So this will give you the price. Convert this into rupees, matlab multiply it with 9.84 and see what rupees is coming here. So if you want, I can do it quickly for you. Or let me show you the calculation. Okay, let me do it. So you are buying from China at 30 yen, plus you're paying custom duty 29.5%. You're paying the custom duty. Total amount to buy it is this. Then if you convert it in Indian rupees, you end up paying 382.28. 382.28. So if you convert the same thing into rupees now, it is coming as 382 rupees, 382.28. Is it good? Check it. Is it good? No. In India, it is cheap. If you're buying it from China, it is expensive. You can see. If you buy it from China, it is more expensive. And when you buy it locally, it is less cheap. It is cheap. Better buy it internally. But if the Indian subsidiary will buy the product internally, what will be the impact of tax? What will be the impact on the overall profitability of the company? That you have to calculate in other portion of the question. Right? So this is how they have solved it. Right? If you buy it locally, right? See what is the total purchase cost. You can see here they have converted it into rupees, and they have considered the custom duty also. This will give you the cost per unit, which is coming as 382.28 per unit. This will be the cost, right? Then accordingly they have calculated it. So the point is that you will see what is the cost the company is incurring. Is it profitable for entire company or not? Is it increasing the profitability of entire company, considering the tax rate of both? What is the tax rate in China and what is the tax rate in India, right? Because tax will also impact the profitability. So considering that, you will solve it and you will find the answer. Okay. So with this, I just want to wind up. I'll expect that you will solve this question. It is the same as we have discussed in the example. It is the same thing. So I hope you find it all easy to understand. You find it simple to understand. And as I told you, whenever you will solve the question, assume the scenario, make a diagram. Okay, so make a diagram, then draw it, and then solve it. It will be very easy for you. And Janvi, for your question, it was not related to the session. Take my mail ID. Mail me. I'll solve the question. I'll forward the explanation to you, or I will take it at the end of the session. When we will have the last session and I'll cover this topic, everything, I'll get one extra session. I'll cover all the question which is not related to the session. I'll take all such questions in the last session. All right. Okay. So with this, let me wind up the session. Have a nice day to all of you. Bye-bye. Take care.